Hey everyone, it's Mark from Stocks and Cash. It's Thursday, January 25th, 2018. Here to give you my market update, show you my holdings, and then give you a couple of trade setups for tomorrow. Jumping in on the SPY, we can see we had another kind of indifferent day, or indecision day, I should say. We haven't quite reached the target of 285.43. We're still holding our upward trend line. Stokes are pointing downward, and the MACD is starting to curl. RSI is severely overbought, so I really do think we have some sideways movement in store for us. And again, perhaps a retest down, to the 21 EMA or so. If today was, the last couple days kind of were our um, top in the short term. We could come back down to 275, 76 or so as it retraces and then moves on higher. But a pullback or some consolidation would definitely be healthy for the market. Kind of get these indicators reset a little bit more, well, a lot more, especially in the case of the RSI, and then we can kind of bounce and move on upward. Taking a look at the Qs. Similar story to the SPY. Not a ton of volume, and truly we're still kind of in an upward trend line. If I draw a line here, we haven't really broken anything quite yet. That being said, and again, I do feel like we have some consolidation, some sideways movement in store. Ultimately, I'd love to see a little pullback, a nice buying opportunity, and then continue on bullishly. So we'll see what happens tomorrow and next week, but that's kind of my thought. Um, Taking a look at my holdings, holding Disney still. Duncan is doing pretty well. IWM had a bit of a down day today. Citi I closed out of. I wasn't crazy about the price action. And similarly for McDonald's and Walmart. Citi and Walmart were gains. Walmart was a small loss. But as you can see, an 18% gain, 97% gain, um, you know, it kind of wipes out the fact that I even had a small loss here on McDonald's. And yesterday, I had an Apple loss of 40% on that trade. Not a great trade, but it was good I got out. Because if you look at what Apple did today, um, it was down even further. So, it was smart for me to get out of the trade. I wasn't working out. I broke below um, my stop level. Got stopped out of the trade, and Apple continued its downward trend today. Um, so instead of being emotional and holding on to it and saying, "Oh, it's Apple, it'll bounce back," I'm going to wait until there's some other indication to buy Apple again. But for now, I'm staying away. So to take a look at the holdings now, Disney really didn't do much of anything. It's just kind of meandering. Really kind of a boring stock. Um, Duncan, I'm liking the looks of. Um, we closed over my first target of 68.35. MACD is looking strong. It's bullish. RSI is just getting into overbought territory, as are the Stokes. But again, RSI and the stochastics can kind of live up in this region without any kind of serious pullback. So I am looking for Duncan to hit my ultimate target of 70.82. But I'll certainly keep an eye on it, see how it plays out. Taking a look at the IWM. Like I said, had a bit of a down day. Volume is pretty normal for this stock, average. The MACD is pointing downward a little bit. RSI is kind of flat in the sense of, it didn't move much from yesterday. I'm hoping what's happening here is we're starting a little bit of a flag pattern. And sometimes these patterns have a tendency to kind of pop up, break out bullishly. This one wasn't really a flag. It was kind of a symmetrical triangle, short term. But you can see 3 days of that, and then boom, we kind of popped out and went up. We've touched the AEMA a couple times, so I could definitely see you know, a little bit of a I don't want to call it a breakout, but a little bit of a run up on IWM. So I'm still looking at that 162 ultimate target. But again, my stops, excuse me, are you know, below the lows of these last couple candles that we've put in on IWM. So definitely want to, you know, lock in my profits, and if I do get stopped out, so be it. I've made a gain, and but ultimately, hopefully, it will um, come up and hit the 162 target. Taking a look at, one sec, please. Let's take a look at City, which I closed out of today. It was up earlier in the day, ended up coming back down, and I wasn't crazy about the price action, so I just got out with a small gain, as you saw earlier. You know, the upward trend is still intact. There's no reason why it can't go higher, but you know, given this type of price action and the way the overall market is acting, I wouldn't be surprised if this came and back tested the breakout level of 77.83. And you can see there's some space between here and the 8 EMA, so there's definitely a chance for City to kind of have a back test before it moves up higher again. The indicators are looking pretty good, but again, I wasn't too comfortable with the price action, so I wanted to lock in my gains. McDonald's, kind of similar situation. You know, we did close above the breakout level here, but when we fell below it on the intraday, I just decided to get out, perhaps a little prematurely. But again, it's more of the overall market kind of showing some tiredness and wanting to kind of either consolidate or pull back that made me get out of that trade. So it may go higher, and I can always reevaluate, possibly get back in tomorrow on a 5-minute rule if we have a strong market day. But I think most likely I'll leave McDonald's alone for now. Walmart, as I had been mentioning, it's been kind of, you know, meandering up very small increments. Honestly, I was just getting a little tired of waiting for it. Perhaps I got out a little prematurely, but I did lock in my gains today. But I can't complain, almost 100% return on this particular trade. So very happy with Walmart's performance. And then taking a look at American Express, I bought in today. I'm a little bit down. I played it on a 5-minute candle, and at that time, I got a 5-minute candle that closed above the first 5-minute candle, so I got into it. Obviously, we pulled back a little bit from there, but we are sitting on top of the 8 and 21 EMA. MACD is starting to curl upwards. It's about neutral right now, but the Stokes are showing some bullish sentiment, as is the RSI. So I do think there's some potential in American Express to move up. Now, you know, if the market rolls over, so too could American Express. So my stop is at the low of yesterday's candle, just to lock in any, or I guess to prevent any major losses if stocks do decide to roll over. Now taking a look at some trade setups that are potentials. Caterpillar. Caterpillar had its earnings today. It opened up here near our breakout level, went all the way down to the 32% retracement level. 38% retracement level, and ended up rallying and rebounding and closing above the 8 EMA. So even though it was a black candle, a bearish candle, you know, it was buyers came in strong to kind of raise the price level back up. So if we get a close above this breakout level here of 173.18, I think we could continue higher. Let me kind of pull these in a little bit so we can see a little better what the targets are. Target 1 is 178.16 and target 2 is 184.57. So a lot of reward for a very small risk. I mean, I wouldn't personally get in now. You could, I suppose, but with this long wick, I mean, you almost have to put your stop at the low of that wick to give your trade a fair chance. And I do think it would be better for it to close above the our breakout level of 173. Furthermore, the Stokes are pointing downwards, as is the MACD, and RSI is still overbought. So I would expect a little more consolidation in Caterpillar. Excuse me. But again, if we do get a close above this level, I think it'd be worth getting in on a 5-minute rule on the following day, or at the end of the day that it does break out. If there's 15 or 10 minutes left in the trading day, and we're sitting comfortably above the breakout level, you could go ahead and buy some calls and put your stop at the low of that day's candle. So that's one way you could potentially play this one. Another one is DE. John Deere. We've been consolidating on this guy. Honestly, pretty similar story to Caterpillar, minus earnings. I'm not actually sure if there was earnings today or not. But it's sitting here at the breakout level. It's been consolidating. MACD has crossed over bearishly, but that doesn't mean a nice pop and close above our breakout level can't swing this around and start another upward swing. So targets are 174.53 and 179.50 on John Deere. A couple more for you. eBay was one that we talked about earlier in the week. It looks like it's trying to break out. It failed a couple times. It doesn't mean that it can't break out eventually, but these two indecision candles probably aren't the strongest indicators. But again, if we get a nice close above the 40.12 breakout level, then this guy could continue up further with targets of 41.82 and 44.01. So definitely want to keep an eye on eBay. MACD is looking pretty strong and healthy. The Stokes are bullish-ish, and RSI is pointing upwards as well. So definitely some opportunity in eBay if it decides to break out. Next is FCX. Once again, very similar situation. I believe FCX had its earning today. Didn't really move a whole lot. But again, MACD is pointing downwards. The indicators on the stock are resetting. So if we do get a close above our target level here, our target breakout level of 20.07, then this guy could run. Again, if we do get a breakout, I'm looking at levels of 21.76 and 23.95. But I would wait on this one until you do get a confirmation on the breakout. And lastly, let's take a look at Tesla. Another down bearish day. Like I had been saying, once we hit our target here, given that ugly black candle, I wasn't very confident in Tesla being long. I personally am not going to short it, but I do think sentiment is more bearish than bullish. You can see the Stokes are pointing downwards. The MACD is about to cross over bearishly, and RSI is pointing downward. The reason I won't short it is because you have the 100 simple moving average here. You got the 55 exponential moving average here that's acting as support. And then you also have this 50% retracement level on the fibs around, let's see, 324. So, shorting's a little risky here. I personally am not going to do it. But again, I also would not be long at this point until we see some indication that it wants to start turning around. So as far as I'm concerned, Tesla is a stay away for me. If you guys have any questions or comments, feel free to post them in the comment section. I will post another video on Sunday for Monday's session. So have a great weekend.